There's no denying it. Gold is hot right now. Prices are soaring, and experts are predicting even more to come. Not so long ago, gold reached its all-time high of $2,069 an ounce. And now it's inching ever closer to that number again. Bank of America, one of the largest banks in the world, is saying gold will rise further to well over $2,200 an ounce later this year. So, what is the truth? Well, folks, gold is already a safety net for your hard-earned money. And now, when the stock market is all over the place and the value of the dollar is uncertain, being safe really counts like never before. Noble Gold is offering a 5-ounce America the Beautiful coin for any qualified IRA or old 401k rollover. Terms apply. A solid silver U.S. Mint issued coin celebrating our national parks, free with every qualifying precious metal IRA or 401k rollover. Folks, you can't go wrong with Noble Gold. We've done it, and I'm tickled pink that we did. We brought in almost a year ago, and boy, am I happy. 877-646-5347. That's 877-646-5347 or noblegoldinvestments.com. That's noblegoldinvestments.com. And do me a favor, tell them L.A. Marzulli sent you. Hey, folks, look, you can think what you want, but I'm here with Colin from Noble Gold. And I got to tell you, honestly, from the bottom of my heart, and talk to my wifey on this, I am tickled pink that I invested in gold when I did, which was last September. It has gone up over $400 an ounce. Colin, welcome to the show. Thanks for coming on.
Yeah, no, thanks. Exciting to be here. And I was thinking about that this morning, and it's just, that's the joy of my business. Like that makes me so happy that you're, in profit. And, I love the idea. That's what I've always liked about gold, is that the profit can be quick, but it's liquid, right? I mean, it's there's probably some people today that have some pretty good profits in real estate, depending on how long they owned it, but they're not going to sell right now because, interest rates are sky high. And so they're going to wait. And if they need the money, it sort of puts you in a bad position. And that's why my philosophy has always been to be diversified, because you never really know where you're going to be or when you're going to need the money. And so right now, if you said, hey, I'm going to sell, I'm in a profit position, I need the money, I'm going to do whatever, great. And it's fast. Like you'll get the money in 2 days. So, I like that idea of it. But yeah, the market is wonky to say the least. And I think your premonition last year was right on.
Well, let me ask you something. We're looking at, and we've heard this before, the demise of the petrodollar. We're seeing more nations turning to the BRICS nation, Brazil, Russia, India, and China, and Saudi Arabia. I mean, this is what we're seeing. I mean, it's no longer, conspiracy theory. The petrodollar right. seems to be on shaking ground. And obviously, if the petrodollar goes down, what happens? That's my question to you.
Yeah, and I think that's the big question is obviously the BRIC nations have been, since I've been in the business for the past 13 years, I've been talking about moving away from the dollar and using another currency or using a basket of currencies. That was sort of the prevailing talk, was that they would go to a currency, they'd use the dollar some, they'd use the euro, maybe they use another currency, and then they would use gold and silver, or maybe just gold. And so the country that's trading could determine which how they want it vested. So if they want to trade in oil for the dollar, oil for the euro, oil for gold, they'd have that availability, which they don't really have at this moment. So I think that is logical to anybody, and logical for the world, that they would want to have some flexibility with our dollar being so weak. If you do a trade that takes months or maybe years, you could be really hurt being in the dollar. It's just a business decision for them. So unfortunately, we've put ourselves in this position because we have, an economy that's stalled. And, even though, and everybody talks about inflation, it is still high, but it has been going down. Yet they've been continuing to raise interest rates. And I know that the Fed sort of has this mandate to get us back to 2%. which I believe is unrealistic. I think they should raise that to 3 or 3.5%, because if they do that, I think we'll get there much sooner, and then they can lower interest rates, which I think, and I don't know how you feel about this, but I think lowering interest rates would do more for the economy than a lot of the other things that they're discussing doing right now.
I mean, look, I'm not a financial guru, but I know this: if people have access to money, and I remember when Jimmy Carter was president, interest rates were up to 21%. Guess what? The housing market was completely flatlined. How do I know this? I had a house on the market, my first and only spec house that I did with my good friend Kelly Higgins, and this is back circa '78. So Carter's president, interest rates are 21%. That thing sat on the market for 2 years. Finally, Kelly, my partner, bought it. I mean, it was just like my escrow check, I think, was $400. I went to the cleaners because we're paying, the construction loans and all this other stuff, and it's just like, so.
Yeah. And your construction loans were based on that interest rate too. So you're paying, 18, 20% for the loans to build those houses. Obviously, that all that compounds over time, and that sort of makes it difficult. And we're dealing with the same situation today as anyone that has a spec home is sort of in the same position, because if they're either doing private money and they're borrowing at what they used to borrow at maybe 10 or 11, now maybe they're borrowing at 14 or 15. So now they have to recoup that spread, and they're not able to because houses are just sitting around.
Yep.
And it's not going to pick up steam quick. The real estate market doesn't just turn on a dime. So it's going to take some time to clean things up. But it is interesting with where we are and everyone, talking about it. And we are seeing inflation cooling. It is starting to cool. It's 10 months. It's creeping down. So now we have to find this happy place where we can give enough money to businesses where they can grow and they're not afraid. I think that's the thing. Confidence right now. That's why the BRIC nations have this ability. That's why Europe and the French prime minister is saying we got to move away from the dollar. They don't have confidence. And when you don't have confidence in a currency, that's where you run into a lot of trouble. And that's the predicament we're in, is that businesses don't feel strong to borrow at these high rates and hire more people. So they're slowing. So everybody's sort of in this wait and see situation. And that's not a good way to grow a company, good way to grow a country. I know they say, unemployment is low, but from what I'm seeing, those jobs are not jobs that most people want. Those are not, high earning jobs. Those are, $22 an hour and lower jobs. And so that's not desirable for a lot of the country to keep up with the cost of living. So yeah, I mean, I think that, they can skew the numbers however they want in terms of unemployment, but if they're not jobs that are going to afford you a decent life, then it's sort of irrelevant, in my opinion.
Well, and I hear what you're saying, and it's having you come on the show is so great, because you've got your fingers on the gold market, on the metal market constantly. This is what you do. I don't, but I do track it every day. I mean, I'm watching gold, go up $50 and then go back down, but the bottom line, it's gone up since I bought it about $400 an ounce, which is absolutely an incredible investment. Now I know the silver market we've heard all this before, the pundits come on and tell us it's being artificially held down and there's only so much silver on the planet and all of these high-tech companies need silver, but it's still being held down. I mean, I remember 10 years ago, I heard, it's going to go up through the roof. It'll go up past $100, all this stuff an ounce. And I believe the actual value of silver should be well over $100 today, but it seems like it's being held down artificially. Right now, last time I checked, it's around $25 and some change. What are your thoughts on the silver market?
Yeah, it's a struggle. I think that, we know it's hit $50 an ounce in the past, and a lot of people don't understand why it hasn't gotten back there yet. But if you look at mining costs, today, you're looking at true mining costs anywhere. You look at all the big mining companies, anywhere from $21 to $23. Depending on where they are and how much they're mining and, how profitable the operation is. So, that's good because the downside risk is low. I think that, we've seen this topsy-turvy market in silver because the silver market is so small that it can easily be manipulated on the stock market in a number of different ways. The last time it rose in 2011, what they did is they changed the margin calls, and actually Fidelity and a few other companies got sued for this. They raised the margin calls for investors, so they made it more expensive. So you have, a big part of the market is these day traders, people leveraging hedge funds. So they raised the amount that you had to invest when silver was sitting in the $42 range. And so by the time it hit 44, 45, and it kind of was holding there, it was getting much more expensive for them to make those calls. And then as soon as they rose it a little bit higher, the whole market sort of fell out. So it can be manipulated on the stock market in the short term, and it was. But in the long term, mining costs is, somewhere in the low 20s. So that's strong. That's a good indication of where it is. And you're right. I mean, it's, all this silver consumption that they're talking about is still not where we are today in terms of, yes, they want to move to electric vehicles. They want to move more to solar panels, but those laws are not enacted in terms of they have to do it today. So I do think in the next 4 or 5 years, you will see the consumption just skyrocket and the price will go up. But the actual consumption today isn't exactly where it's going to be. It's going to be there in the future. But that's also something to think about as an investor is what is your strategy? Are you only looking at, investments that are going to move up in a year or two, or do you have some things in your portfolio that you're looking 4 or 5 years down the road? And so it's an interesting thing to look at in terms of the silver market. In the short term, I wasn't on your show when I talked about this a few months ago, but like platinum 100% was going to go up from, $900 because, or $920, because they basically decided they're going to start moving the use of palladium and catalytic converters, and they're going to move it to platinum. So the writing was on the wall. So, for platinum to hit 1300, it's going to happen. It's going to happen soon. So that was a short-term demand that had to be there. And then, we know that platinum is much more rare than silver is. So that's another reason it's just harder to find it. So you're going to have these events that are going to trigger things in the short term, but I still think most people today are looking at downside risk. Yeah, they're looking at, decent gains. They want to make, 6 to 8%, maybe a little bit more securely. But they're really concerned about that downside risk. And so, and then, talking about the gold market, 2000 is that number that everybody kind of talks about. And so when it broke 2000, it would go below, and it broke. And so now it's finding its floor. And there's still some data that it could potentially go back to 1950 or 1935, depending on the sell-offs. But I do think, like when it broke 1,000, when it broke 1,000 in 2009, close to 2010, it had to create that floor too, right? And so I think that's what's happening now, is that gold's finding that floor at 2,000, and it's going to dip and go up, but it is going to find that floor, because for years after, when it broke 1,000, everybody was saying, yeah, these doomsayers, it's going to go back, it's going to go to 900, it's going to go 800. And sure enough, it didn't. The demand was there. And I think, as and you're talking to people, the demand is there today, because you have that currency issue, that currency debasement. And so as long as that's happening in the world, people are going to look at gold as a better option. And so many places are talking about using gold as potentially a backing of their currency. Even Texas is, they have a law on the books right now where they want to use the gold in their Fort Knox, but they have their own depository, and they want to have a currency that they distribute in Texas that'll be partially backed by gold. So this is a very rampant conversation. And as you said, I think in the beginning, this isn't hearsay anymore. This isn't speculation. Like, these things are happening, right now, and they're on the ground.
So let me just throw you a scenario here. Let's say we have a complete and utter collapse of the petrodollar. Whether that is a reality or not, I have no idea. I don't have a crystal ball here. I know you don't either. But something's going on here. The fact that more nations are turning away from the petrodollar, and America is, in my opinion, is in a very weakened state right now. We're sort of a laughing stock. They're about to open up the southern border. So what's the scenario if, let's say, the petrodollar collapses? I mean, they've been talking about digital currency now forever. And that seems to be where they're going, some sort of a digital currency, how would that affect the gold and silver and platinum market?
If it's not backed by something, it's irrelevant. And so that's the problem with the whole scenario. The petrodollar was for years the world's safest choice, right? It made the most sense because we had on paper the lowest inflation comparatively to other countries. I mean, I keep this thing on my desk. I wish not this desk, another desk that I have, and I have this Zimbabwe $100 trillion note from 2009,
Right.
and my kids love it because it's funny because they make it look gold. They make it look gold, and it's got like, it looks like a gold, like it's 24 karat kind of gold in there, and it looks it's a beautiful thing. But it's, you know, it's worth that $100 trillion note's worth $2.50. You know, they had 50% inflation. So petrodollar doesn't change unless they can find something that has a better scenario for inflation. And that's why the basket of currency scenario really makes the most sense. It hurts us. It does. It undoubtedly hurts us because the more people trade in our currency, the stronger we are. But if they're going to go to something else, they have to have an option that is desirable. So I think they go to a basket of currencies and they go to gold, which a lot of countries are using already to trade. I mean, Russia is mostly trading in gold because that's what people will accept from them, and it's easier for them to move it. So there's a lot of countries that are already doing that transaction in gold. I don't think Russia even probably wants to do it in gold. They'd rather keep their gold if they could choose, right? But they don't have an option. So I think the scenario is gold becomes an option in that basket of currencies, and I think gold goes up pretty considerably and quickly. And also, I think what it does, you know, I know they like digital currencies because, you know, it's easy to move and it's easy to do things, but most major countries are lending against their gold that they have in reserve anyway. So it's really easy to audit and then figure out how much you have and then do a system where you're borrowing against that gold that you have. And I think, frankly, that it is easily as affordable. And actually, if you compared it to like a crypto exchange and you're, you know, if you're following the crypto market, the fees and the electricity and all that is getting quite expensive. But doing a trade where you're bartering and you're doing oil against somebody's gold in reserve, and maybe you're shipping it or maybe you're not, maybe you're holding it for another country and then you're trading it later. That's a really affordable way to transact business for a country. So I think there is going to be something that's going to happen. I think in the next 2 to 3 years, something does change. I think it's happening. It's been happening for too long, and they're going to make a shift. And then, you know, at the end of the day, if we continue to be weak over the next 2 years, and when I say weak, I mean financially, if our country is weak and we have high inflation and we're not growing, they're going to just say, we don't have a choice. You don't have a choice. We're moving away from this. You're going to have to accept gold or whatever currencies that they want. And that's going to be the end of the story, really.
Well, let me ask you this, Colin, and thanks for coming on the record. I don't want to go too long because, you know, we could spend the next hour speculating and talking and everything else. But all I got to tell you, folks, is this. My wife and I sold our house in Oklahoma. We made a little bit of a profit because the real estate market was at an all-time high. So we took that money, and I'll be honest with you. I mean, I really felt I had a word from the Lord, invest in gold. And so we did. You know, we had a chunk of change. And so looking at maybe the possible collapse of the petrodollar, why not back it up with hard currency or, you know, precious metals, as it were. And honestly, financially, I'm not a financial guru, as many of you know, but it's one of the best decisions we've ever made. We're up basically $400 an ounce since we purchased it last September. So I'll give you an idea. So let me ask you, Colin, how do folks, you know, access this and check it out? And of course, there's a caveat, you know, this is not a get rich quick scheme, but if you want to add precious metals to your portfolio, you know, really pray about it, think about it, look at the options, understand that there's a risk no matter what you do. But how do people access it, Colin?
Yeah, so there's a few different ways. For people that don't want to talk to anyone, you can just go to our website, Noble Gold Investments, and just get some information there. Or you can call if you have questions or if you want to connect with somebody. And I recommend that because I think everybody has questions, and it's just easier to get those questions answered on the first call or the third call or the 10th call or whatever, however many calls it takes. And we don't care. But, I think it's good to build a relationship, and our business is built on relationships. And I was talking to somebody about their business, and like they were talking about AI and how all these things are going to take away. And it's like, I built Noble Gold on with humans. Like, this is a human business. This is like, people talk to live people, and yeah, maybe at some point I'll use some to figure out, leads or the website. I'll use some kind of that technology, but the business of money and the business of buying an asset that is like this has to be done through humans. And so, we have a great group that loves gold and silver. We call it the Noble Gold family. So I think getting a call and connecting with someone and building a relationship and just getting all your questions out is the best way to do it. And I always talk about, when you're making a financial decision, is get all the information and really dive into it. And then, and then if it's not right then, and then you table it to a later date. And that's what's happened. I mean, over time, you obviously knew, and you've probably been thinking about it for a while, and then you were ready to make a decision, but everybody's timeline is different. So we just say, like, call us, get our free guides, send it out. Let's send you some information. And then let's see if it works, and you can ask more questions, and the market changes. And we're really in the relationship business. And I've been doing it that way for 13 years. And it's, most of the people who work from us are referrals from people that work from us. My father, who's basically retirement, but is a horrible golfer and doesn't want to retire. So he still works. He works 5-6 hours a day because he just likes to talk to people. And he's, someone that was in Vietnam and, has a lot of life experience, and it's great for the group to have him there. And it's fun for me too, to have him involved. But like, we have all different ages and all different types of people. And it's just great to build relationships. So they can go to noblegoldinvestments.com, or they can call us at 877-646-5347. Either way, they'll get information, and then, they can decide if it's right for them.
Colin, thanks so much for coming on the record, folks. That's noblegold.com, noblegoldinvestments.com. Check it out. And, we have it on our site. They sponsor our show right here. And we did it. So I'm not telling you to do anything that I haven't done myself. And I'm really glad that we put some of our finances in Noble Gold, and I think you will too. But again, be cautious. Do your homework, make sure it's something that you want to do. Obviously, you're not going to put everything that you've got in there, but certainly add some precious metals to your portfolio. Colin, thanks so much for coming on the record. Really appreciate it.